the hell happened there? Stop recording. That's weird. How far is it in? First 9 minutes hasn't been recorded. Sorry about that. All right, there we go. Now, if you were to try and draw a shift pitchfork like this, would it be considered valid? Does anyone have an idea as to why it might or might not be considered valid? Okay, so straight up, it wouldn't be considered valid because it doesn't follow the trend. This center line has to follow the trend. If it's just going straight like this, what you're doing there is you're not following the trend until you get to about here when it starts to move sideways. But if you were to assume that we only have this much data, this pitchfork would be invalid. And this is where you need to start to understand that different pitchforks are used for different things. So we wouldn't use this one in this situation. We'd have to use a potentially more basic model, which would be this one, which would help you identify it more. So that's just how we would use different ones. An example of that being used properly would probably come maybe here. Yep, so that there, right there, quite easily. You can see that it's tested really well along the bottom here. You can tell that it's providing a very, very nice top resistance there. Although it does break here, we wouldn't really want to enter into a short at this position here because it's only had one real big test prior to that. So next one that we're going to talk about, again, it's from the pitchfork, however, is the modified shift. Now the modified shift has a much more, I guess you could say, aggressive correction than that of the just the standard shift. So if we were just to do that, and then to compare them both on the exact same points, it's actually not that much more, but it is just a little bit more aggressive. Now again, all that allows you to do is it allows you to try and identify different levels of support and resistance, and is a very, very, very simple model. So if we were to try and do something like that, there. In the previous example where it had the cutoff on the top, this one allows us to engulf the whole entire situation. So it tells us right there we could enter into a short quite successfully and we would end up making quite a bit of money. And then the final one is the pitchfork fan. Personally, I do think that this one is quite useless. And I do believe that Mohammed feels very much the same way. That is not that. What's this? It works in a very similar way, however, just provides a fan. Now, intuitively, if you look at this and then you compare it to some of the other ones, can anyone tell me why this one might be a bit useless?
It doesn't follow the trends. It doesn't show you the breaking and closing points.
Exactly. It doesn't show you, it doesn't follow the trend exactly. But if you also just look at this, it misses so much data. It just completely misses it. Now, you might be going, oh, well, this is actually quite good because it acts really well as resistance here. Okay, it's acted as resistance on one particular point in one particular point of time. That's not really a successful trend or a successful tool. If we look at some of the other ones, it engulfed the entire data and followed the trend really, really well. So if we were to pull that one up again, ABC, maybe not that one. There. Can you see the difference? You can see which one would be obviously exponentially more useful. Fantastic. Does anyone have a question about the pitchforks? Brilliant. It's going a lot quicker than I thought it would be. So the next one that we want to talk about is something that we actually haven't talked about at AGI ever before. And the reason for that is because I've deemed it a bit too complicated to talk about. And that is Garn. Garn is one of my favorite tools. It's one of the theories that I've built my entire strategies around, and it's really shaped the way I've become a trader. Mohammed hasn't really explored Garn, even though I've been trying to push him to do that for the last few years. But he chooses to stick to his algo trading, and that's fine. Now, what Garn stated was, Garn was a very, very smart person who said that all assets move along a particular angle, and that angle is the path of least resistance. Now, the path of least resistance goes back to, I guess, Ohm's law, which is a law in physics that allows you to, that pretty much says the current will travel along the area of path of least resistance. And that's what Gahn tried to model in this one. Now, essentially, it's a very, very simple model. It's just another fan. And all it does is it shows different angles. The big one, the one-to-one, that is generally defined as a 45-degree angle. And then these ones are obviously subsequently less. If you'll note, it'll say 1/2, 1/3, 1/4, 1/8, 1/1, 2/1, and such. They don't mean anything. Don't take them as meaning, well, if it's a 2/1, it's better than a 3/1, or if it's a 4/1, it's better than an 8/1. No. All that they do is they show support and resistance levels. And one thing that I do like about Gahn is that it's a prediction or a forecast into the future of where support and resistance areas might be. Now, you can use Gahn to identify breakout periods really well, but you'll notice that there's quite a big issue straight away with it. So if we are to do it, the process of it is finding a distinct high, so here, and then drawing out 45 degrees, down to there, and then getting the Gahn tool and just tracing over it, just like that. That is the setup, done. Now, one of the biggest problems is that you'll notice if I do this, it's now 36 degrees. And if I do zoom in a lot, it's now 19 degrees. So if I was here and placing a tool and getting it 45 degrees there, and then dragging it out like there, it's no longer valid because it's 65 degrees now. Can everyone see that? Now, there are two really, really simple ways to combat this. The first one is to just go to settings and lock in the price to bar ratio. And that will allow that should allow, that there allows the line to stay the same. Or there's a way that I prefer to use. It's much more accurate and it gives you the line or angle that you should be using. That is to use the regression trend. Now what you're going to do here is by using a regression trend is you're summarizing all the data and you're regressing it into one straight line. And that straight line will give you an angle. So we're going to start at the top and then we're going to go down to the bottom to a B pattern. And then it will summarize this lovely thing for you here. Now it says that regression there is 95 degrees. That's fine. Even though it's not along that 45 degree angle, we can get a much, much better result. Now, the most important thing that you can do here is to zoom in as close as you can and identify where the last touch is on the graph, on that regression. So for us here, it's that point right there. We wouldn't want to do it at the end because it's not touching data, it's invalid. We need to go to the last point that it cuts. Go there, make sure you touch it right there, and then just trace out and make sure it covers that center point. And there, you've just drawn as accurately as you can a Gahn fan. It will act as resistance and it will act as support, and that's one of my favorite things about the particular tool that we use here. Now, one of the great things about Gahn is that it doesn't actually need more than one touch to be valid. You can take it for the one touch if you want in this situation here, or you can wait for multiple touches, such as here for a buy. However, it's just broken that. Now, one of the most important things is when it actually breaks a line. When it breaks a line, it means that trend is likely to continue until it meets a significant or opposing force. So in this situation here, it broke this, retraced all the way down until you got this one here. Now, how would we have known that this one would be valid? Because we have a small little retrace here. Now, there's something called a center of gravity model that Gahn touched on in his later years of work. And all you're doing there is you're adding a Fibonacci retracement to your all you're doing there is you're adding a Fibonacci retracement to your Gahn fan. Now what that allows you to do is it allows you to identify where the asset is most likely to drop or increase based on historic data. So if we go to this point here and we look for a cross, bang. Where the two things intersect, we have a massive change. Same thing happens here, where you got an intersection. You could quite easily go with the trend and into a short, because it's just there. Missed it by a little bit, but that's fine. That'd just be down to human error. So does everyone understand that idea? Does anyone have any questions? You guys are very quiet today. Okay, cool beans, cool beans. So one of the great things about this particular one is that you can start to overlap it and try and identify where different areas of support and resistance may be. So let's say we've got this one here and we're going to draw another one down from here to there. We have another one. We're going to zoom all the way in, find the area that it needs, and just draw it diagonally across. Now, is this getting messy for anyone? Yeah, it's getting a little bit messy. It's starting to get a little bit hectic. Yeah, it's gonna. Now, one thing that you'll notice is that this point here, the 45-degree angle is pretty much your key, your go-to line. Once it starts to approach that, you should start to consider looking at either a strong buy or a strong sell. Your 45-degree angle is pretty much God's gift, if you want. It'll act as the strongest support or strongest resistance, and it will allow you to identify breakout points very easily. Once it's broken above this, intuitively you should enter into a buy. It's broken that, it's just going to keep going up. Here as well, if you look at it, it follows this trend very, very well, but then deviates and just goes. Very easy. Okay, so does everyone kind of understand that the way that regression Garn is drawn up? No worries. Does anyone have any kind of questions about that?
Could you use the 45-degree angle the other way around, going upwards trend?
Absolutely, absolutely. No. You can use it upwards as well. So let's take, for example, we regress from this point to this point here. Now you'll notice that the last touch actually doesn't touch that. So make sure you do actually zoom in. Don't just use your eyes, because if you get it wrong, it'll fuck you up, something chronic. And I'll just clean up this graph so we can see your point much better. Okay, so here, does that help? As soon as it's broken below, bang, straight into a short, straight into a really, really nice short. And you'll see immediately it's broken that, met support at the 3 to 1, but would we necessarily want to buy in this situation? If we were in a short, if we entered into a short up here, and we were down here, would we want to enter into a buy? No, exactly. The reason we want to enter a buy is because 1, it's against the trend, so we don't actually know if it's going to be valid. 2, you'd want to see if it tests that 2 to 1 and if it retraces back down. The reason for that is you've already made quite a bit of profit at this point. If you were to enter into a short from here, you've already made, 100 pips? That's very good. If you lose, say, down to 60 pips, that's still very, very good, and you could exit the trade there. But what you want to do is you want to give yourself the benefit of the doubt, wait to see if the retrace is actually going to happen, and then continue. And if you did continue, you probably wouldn't need to get out down to there where it met support down there. You've just made 200 pips over a period of 12 hours. Yes?
So would you take, you said you take profit at the 8-1, or would you say that where you're...
No, I wouldn't necessarily take my profit at the 8-1, the 1 over 8 either. Because if you just look at this situation here, has it actually tested it for support? And if you did, it went back up to the 4 to 1 and then met resistance straight away. So what the Garn allows you to do, it allows you to trade between sections and allows you to identify where you should be entering into a trade and where you should be getting out of a trade. If in this situation it had in fact gone something like this, bounced there and then gone up and broken that 4 to 1, 100% take your profit straight away. Don't even risk it. Because once it starts to break through lines, it's starting to gain momentum. And that's what it's done here. It's broken through the 1 to 1, broken through the 2 to 1, tried to retest up, gone, nah, we don't have the strength to do that, then just plummeted. And that there's how we'd use this. And just using this alone, I'm drawing shit everywhere. And just using this one alone, you can map your entire trade pattern. The only issue is that once it breaks that 8 to 1, you might have to redraw, because that's going to be a change of behavior. However, it's very, very simple to do that. We just get our regression tool up, go from A to B. Does anyone know why I'd avoid that one? Why I wouldn't go A, B, and why I'd go A, B down here?
That's still part of the trend.
Yep. So for anyone that didn't catch that, this one is still part of the trend and it's not a significant retracement for me. It's also too close to where the A pattern is. You want to give yourself a little bit of distance. If you incorporate more data, you're going to get a little bit better of an angle. So here we're looking at a 91. Also, I should make this very clear. If your angle is not near 90, that's fine. Sometimes it's been near 10. Sometimes it's been near 15 or even 50, that's fine. The angle doesn't matter. All that matters is this regression middle line. So then we're going to trace over it again. Go bang like that. And we can see that it doesn't really show us too much until we get to this point here. Yes?
Say you only had up to here, all data.
Where? I will do a replay. Where?
Oh, like around here.
There?
Yeah.
There?
Yeah.
Bingo.
And
You know, I'll just clear everything. Yeah, and then what?
then say you draw it from like there to there.
From what? You know what? You just come to it.
Okay.
Yeah. I'm not gonna do this rubbish of you telling me where. You just come to it.
So do you know how you drew it from here to here?
Yep, from the loads. Yep.
And then what if you get like new data that's forming lows, like low points lower than this? Would you adjust it?
No, not necessarily. You wouldn't need to necessarily adjust it until it's actually had that massive change in behavior. So you still have this is. You see how this is still a downward slope. As long as it doesn't go, so if it goes, so what Harami there is saying, if it goes like this, and then like that, is that correct?
Yeah.
That's fine, because it's still part of that trend. However, if it went like, say, this and then bang, that there would be a problem. And this here would be rendered invalid, because it's no longer following that trend, and essentially what would happen there is it would completely break that 8 to 1. It would just shatter it. So then what you'd probably need to do is you'd need to revisit the one that you drew over here. So we'd go from there to there. Yeah, you'd need to revisit that one and use that one as the key identifier for the trend. Does that make sense? Yeah, you don't sign. We just covered Garn regression. Yeah. You've done that, haven't you?
Briefly with you. Yeah.
Okay, yep. So does everyone kind of understand that? So all the Garn fan does is it allows you to identify key support and resistance areas based on these particular lines. Yes, your graph will get messy. When you have 4, 5, 6, 7 of these going, it starts to get a bit hectic. But all you're doing there is you're allowing yourself to have the best possible opportunity of identifying where the support and resistance level might go. So I'll draw up one, and I want you to tell me if you think that it might be valid. Do you think that would be valid? No, absolutely not. It's way too short period. That there would be ridiculous. And even just looking at this whole period here looks like sideways movement. If you were to draw it at that kind of a level, I hope it's not valid. Yeah, well, it is a little bit there. But it's probably not the most ideal situation. What about, say, from here to here, and we have all this data? Would this be a valid one? Is it? Do you think that's valid? Absolutely. Absolutely. It's still acting really well here. Look at this. Bang, straight into support, bang, straight into resistance, bang, straight into support. And the great thing about this line here, it's been tested 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 times. They're solid as fuck. Nothing's going to break that line. And the minute this line does break, what should you intuitively do? If it breaks that line, so you see that? It's testing it. I was pointing to this one, the 4 to 1, sorry. If it wasn't, I'm just going to press play. And then, yep, just drops a little bit.
So are you saying if it breaks the line?
If it breaks that line, you should keep going with that trend. So let's say in this.
Hence why on the other side over here, when we started with the regression trend.
Yep, here.
We started breaking 2, 2, 1, 3, 1.
Yep.
We buy.
Yeah,
Because it fell back at 8-1, then that's when we take a short position.
100%. So if we were to walk through this entire situation here, what I'd do is, see this point here, it's testing. See how it's resistance here? Then it started to act as support. Bang, there would be my buy opportunity right there. I'd enter into a buy. If I was looking here, I'd get concerned because I'm going, okay, is it going to break it? Once it's broken it, once we've got that big engulfing, see that engulfing green? I'd go, I'm set, happy days. There's no need for me to be concerned. The next time I need to be concerned is at the 3 to 1. Now I look at this and go, okay, should I be concerned here? It's broken through a little bit, but then retraced, but then broken it again. Beautiful, no need to be concerned. Here, absolutely no need. Now here, this is where I start to get a little bit worried. You're starting to get sideways movement, and even if you look at this peak, it's not, I don't think it's going to break it. Previously, if you look back historically, it hasn't been anywhere near it. So intuitively, what should that say to you? It's overpriced. I'd take my profit potentially right there. I wouldn't even risk it. If you wanted to, your sell position, where you'd enter into a sell, you'd be looking here and you'd go, okay, look, it's tested at a support a few times. I'm concerned about whether it should be a buy or a sell. Just wait that hour. Don't risk it. Don't risk taking a gamble on losing money. Just wait that hour. Broken. Straight away, enter into the short there. Your next test is going to be here. It's broken it. Happy days. But it's found support. It's going into sideways. It's broken up it again. But would you enter? Would you exit the trade right here? Would you exit the trade?
I wouldn't really know. Probably not, actually.
The answer would be no, because what your next thing would be is it going to break through this one? If it broke through that means you've lost the trade. But see how it's still here? You haven't lost the trade yet. Stay, bang, down to there. And that's how you'd use the gun fan. Does everyone kind of understand that, or do we want to do another one?
Just one more thing.
Yeah, go for it.
The gun fan, you said you start from the last point it touches. Is that what you said?
Yeah, absolutely.
But I'm confused because you're starting at the beginning. What do you mean? When
Here?
You say, yeah. What do you
Here?
mean?
Oh, well, sorry, I meant the last point on the left. That's my bad. Sorry, that's my bad.
Okay.
Yeah. So this here is where the last touch is. Oh, I should say the first touch in this situation. Sorry, my bad. So that's where the first touch is. We'd want to draw that out, trace it all the way down, make sure that it's following that center point, and then that's how we get a very, very valid situation.
And all those lines can act as support and resistance.
Yeah, 100%. One thing though that you should note it is that in between the points doesn't mean anything. If you're going to go, oh, it's broken above this point, that's fantastic, that's sensational, doesn't mean anything. You shouldn't be entering into a trade halfway between a line because you don't know what's going to happen.
Only if it's broken twice.
Exactly. So in this situation here, would I enter into there right away? Absolutely not. Would I enter into there? No. Would I enter here? Fuck no, that's suicidal. That's straight up killing yourself because it's halfway between the gun fan. You don't know what's going to happen. It could reverse straight back down, which it did, and then it plummeted. You only enter into buy and support at the line or just a little bit past. So in this situation here, see this? It's cleared it brilliantly. Enter into a short straight away. The reason I didn't enter into it here, because look at that tiny little, that's almost a doji candlestick. What a doji signify? Indecision in the market. So we don't actually know what's going on here. But by the time it's gone above that, it's too far. We don't know if it could retrace, and also considering how far up it is on the actual fan. So we'll do another one in this situation, just because of how much I do enjoy doing gun stuff. So we're going to use this point here. We'll go from 1 to 2. Now, can anyone, you had a lot of questions. Where would I enter? Where would I start the fan? Just come up and point to it. Yeah. You see it enough?
Because when a real body touches, is that what
No. Just the first touch, the first touch. It doesn't matter where it is. Yep, right there.
Okay, I thought you wanted the real body to
No, does not matter. It does not matter as long as it's the last point of where it touches that data, the first point where it touches that data. So that would be right there. Now, it wouldn't be here because it actually hasn't touched that. I did discuss this with someone, and some people have had the idea that you should extend the line outwards and it should be the actual last touch there. I don't particularly like doing that. The only reason is because it's outside the regression. If you wanted to, you would have to incorporate that data into the regression, and then the angle would potentially change. And we don't want to have inconsistencies. We want everything to be consistent and controlled. So what we're going to do is we're going to enter in right there, make sure that it's traced correctly. Now, immediately you'll notice that the angle is below 90 degrees, and I said that doesn't matter. It doesn't matter, so don't get too concerned about that. And now let's have a look. Now, can anyone tell me where our potential first entry point might be?
second break, 2-1.
Would it be 2-1? Okay, would we enter into a short here? No. Would we enter into a buy here? No. No one does. Okay. Okay, sensational. So yes, the 1-to-1 is the strongest point of support and resistance. However, what you'll notice is it's actually just hugging this entire area. We haven't actually had a decisive break yet. It actually hasn't gone out to our key angles. The 1-to-1 usually follows the trend. However, it's the wings that provide us with our support and resistance and buy areas very, very easily. So what we do here is our first entry point will actually be there in a short. Does everyone understand why our first entry point would be there in a short?
Is it good if you go increase in price or decrease in price?
Well, my close, but my intuition between entering to a short here is it's broken it. It's broken that, and we could enter into a short right there.
Can't you say the same for the 45 degree?
A 45 degree back here.
Like, so if it broke...
Just come up and point. I don't know where you're pointing to.
I'm probably wrong, but like if it broke here first... and
Here?
you wait for it, wait until between lines,
Yeah,
No,
see that?
don't work, yeah.
Between lines too much. If you were to do this, I know what you're saying, and you're saying, okay, if the 45 degrees is such a strong line, why can't we just enter in positions off that?
It broke twice, that's what I was thinking. Yeah.
We've got a big breakdown here and we've got a big breakdown here. But if you were to do that, that's fine, you can do that. However, you just have to estimate where your take profit would be. So would you want to guess as to where your take profit would be? Personally, I wouldn't want to take that gamble of guessing where a take profit would be. You could do that if you were just going to go, okay, every time it breaks that 45 degree angle, I'm only going to put take profit of 20 pips. That's fine, you do you. And that would work in that situation. If you were to do that and enter into a short straight away, there you potentially use 27 pips.
I wasn't going to enter into a short there.
Yep.
I'm saying that's just the first break, and then when it breaks
Here?
further up, further up.
Here?
That's what I was going to
Oh, this situation here?
Yeah.
Okay, so yeah, the same thing goes again. If you wanted to and you were going to enter into a break there and you were say, okay, I'm happy with making just 30 pips, 40 pips or something, you could do that. That's fine. That's up to you. My concern for not entering into this position here is because it's just too far away from the next line. Too much can happen.
So you should really work between two lines.
Exactly.
Even though 45 is
But you can fix that.
Yep.
You can 100% fix this gap. And how we would fix that gap is just drawing in another fan. There's nothing wrong with just drawing in another fan. So our last touch was there. And just like that, you have more entry points. You have more points and you have a better idea. So just going off what he said is if we were to enter into a short here, that there would be fine. But our concern would come straight away here. So once we go here, okay, is it going to test? It hasn't. That's great. It's going to have it here. It's failed to break. Take profit right there. Reason for that is because we don't know how long this trend's going to go for. Your next point of entering into a short, would it be here? Would it be here? Would you enter a short right there? No? Absolutely. The reason you wouldn't want to enter into a short is because it's been tested as support here. It's failed to break it. Your next point that you want to enter into a short would actually be right there. Enter into a short, your concern would come here. However, you won't exit the trade. Next concern there, it's failed to be a full retest. It's just completely broken there. Here, you got test there. Is it going to go back up? No, that's fine. Stay in, and you could continue to go through. And then once it's broken that 8-to-1, you've just made an absolute shit ton.
So if it did break the 4, did you say 4 for 1? What's the term? What did you say?
I was just for the last point.
Yeah, I'm just saying if it did break the 4-1 line,
This one.
yeah, then you would go into a low position, right?
If it was to do this, if it came down and hit their side and then went back up and broke that, yeah, you would only enter into a buy once it broke that 3-to-1.
Oh, because you want to, okay.
Yeah, because you want to give it the chance to retest back down.
Okay.
So what would happen here if it did go and you went like this? Actually, I'll just clear this line so you can see a bit better. If it came down and went like this, traveled along here, then came back up, you wouldn't enter. You wouldn't exit the trade straight away. You'd wait for it to hit here, wait for it to test, and then make a decision. Because if it just goes back down like that, who cares? You're still making money. But if it comes up and goes like this, there's a concern. But you'll exit the trade as soon as it breaks it and you'll still have made some money. It'll be a tiny amount, but you'll still have made some money. Making $1 is better than losing 10, you know? Yes?
You know how you're saying that you only need one touch for a support and resistance line basically? Are you confident enough to say you were entering in a sell position there and it broke that 3-1? Could actually use that as like a stop loss place?
Yeah.
You're confident enough?
100%, yeah. Yeah, I would. If you wanted to, you could move your stop loss down to there, and that's fine because at that point you're still making money. You cut it to say I'm okay with making this much, and that's fine, and that's up to you. So does everyone understand? Does everyone have a good idea about how to use the gun fan? Yep, brilliant. No worries. And I guess the last, well, there's actually two tools that we're going to use. There's one that's a bit, I'll put this to you guys. There's a tool here that I wasn't going to teach because I think it's a little bit hard to understand. Do you guys want to try and learn it though? Yeah. Okay, no worries. So I'm just going to have to change the settings on it though. Oh yeah, it's hard. It is not fun. Yeah, I tried to learn this a while ago and did pretty well. I came up with a really, really good strategy with it that takes about 5 minutes to set up though. But we're not going to do that. We're just going to do the basics of it. Why is it doing that? Okay. So one of the Satan's, I reckon it's just devilish work, is a gun box. Now, a gun box can be used in two ways. I'm going to teach you one of those ways. One of the most advanced ways is called fractal mapping, which I did teach to some students last semester privately. I don't know if any of them are here, but yeah, that was fun. So gun box can be used to encompass pretty much all available data, and you want to try and identify where a reversal or a change in behavior of the asset might occur given the current situation. So the real simple way to use it is you want to go from an A to B again, but you need to use a significant low and a significant high. Now, what do I mean by significant? I don't mean this one. I probably mean that one. So what we're going to do is we're going to grab the gun squared fixed, and we have to go from the previous high. And then we're just going to drag down to that point there. Now, does anyone know why I stopped at that point? Reason is because it's the second line. So if you zoom out, there's actually 4 lines. So 1, 2, 3, 4, 5, 6. We want to use the second one, second base, which is this one. Then what we need to do is we need to grab the gun box. And you start at the top, and we drag down, follow that 45-degree angle to the second one there. And you've just done gun box. Now the next thing that you need to do is you need to copy and paste it. Make sure that they line up each time. Now this is the basic form of it. Now what this does is it incorporates a little bit of Fibonacci, as you can see on the side, 0.25, 0.3, 0. All that. But it also incorporates a bit more of an advanced Gann theory. Now the idea here is that every single one of those lines means something. Your idea here is to try and identify what a particular line means. If you don't understand this is fine. This is one of the more advanced applications of Gann. There's not a lot of reading on it, so if you try to find it, you'll usually find an Indian guy talking on YouTube about some rubbish that you won't understand. Now the idea here works exactly the same as when you use a normal Gann fan, except it's 1,000 times more complicated. So let's try and identify this particular, Let's try and identify a position here that we might want to take. Now, let's say that we've got all the data up to, where's a nice easy spot there, up to this point here. Now, what way is the trend taking? Actually, we actually wouldn't have it down to there because we'd need that low spot. Sorry, I'm just gonna have to exit it. We'd have to do it from Okay, so this is all the data that we have. And we want to know what our potential position might be for the next movement. Can anyone tell me what position they'd take and why? Just based on what we've learnt today? Or at least try to have a guess, even though you do know what's going to come next because you've seen it. But can anyone try and tell me why it might happen?
Sell because it's forming lower highs, lower lows, and then we're at the lower high right now.
Mhm.
With the that line in the middle. I don't know which line that is.
This one?
Yeah, that.
Okay, that's correct. There's also one other thing, it's also at the 0.618 resistance level. So the way this works is every line is a breakthrough point. This method is mainly used on much longer term data, usually on the daily or weekly. But the way it works is each line here represents a breakthrough. So what we've done is we've gone here and let's just zoom in a lot. See here how it's really failed to kind of have a massive breakthrough. It's broken through a little bit, but you don't know what could happen next. So if we just skip forward one, bang, it's failed to break that line into a short. And that is essentially the whole idea about it. So in this particular situation here, let's have a look here. In this one, it's always good to highlight the line that you're going to use if you're looking at it. See here how it's failed to have a massive breakthrough? Once it's done that, enter into a buy. Do you get that? Or this situation here, this one. You see that? It's kind of gone up and down between it. Hasn't really had a significant break. It's broken that line, You have 2 points of confirmation, enter into a buy. The Garn box is used to try and identify or try to get as best confirmation that you can based on different angles. The angles overlap to try and give you the best situation where you can enter into that buy position. And once it enters into a buy, or a particular position, it will generally be quite hard for it to exit that. You can even use something like this, a wedge strategy. Between here, the asset's just been moving sideways. Once it breaks out, you've got your buy opportunity. Does everyone see that? Now, it's fine if you don't want to use this or don't even understand it. That's fine. It took me months to kind of get my head around it and all the ways to use it, because also actually there's another thing that you can use where it takes into consideration time, and that's where you start to get fractal mapping, which is much more complicated than just doing support and resistance lines based on angles. So I think what we'll do now is we'll have a 5-minute break, and then when we come back, we'll do what we always do at the end of the class, where we break you guys up. Since Mohammed's not here, I will be acting as the positive and negative side, which will be fun. We're fully sick cause, yeah, Habib, it's a short. Yeah, so yeah, have a 5-minute break. If anyone has any questions about anything that we've spoken about today, feel free to come up and ask me. So yeah.
First day. I told, it's been with Jake the whole time.
Hey mate, how you doing?
Good luck for the army, how have you been?
Yeah, not too bad.
First day at uni today.
Oh, serious?
First day at uni. I came back last night, 9 o'clock. I've been in Malaysia. I haven't been home. I was in Malaysia for about 2 months. Then came home on a promotion course. I'm corporal now. And then first day back at uni today. I met my whole class today. Talking to Jacob as well.
10 minutes delayed. Yeah.
Oh no, we met end of semester and he's kept me updated since I've been gone, which is good.
Sorry?
I said I thought I'd come to this because my money's doing nothing but
Very honestly. Yeah, you know, man, doing pretty good. You're coming up with new strategies now. Came up with one that does about 13 mil a month every 3 months if you do like 24-hour trading now.
So how's the message for you? How was that dinner last time?
Yeah, oh mate, it was mental. Yeah, we love it. Yeah, we love going to that place, Hunter and Barrel City. Yeah, it's really good.
So how have you been?
Yeah.
It's been send you every single
What's up?
It's really good. Like, really, just is that the plan anyway? Or are you gonna come back to India? Okay, so you still work with the market.
But because when I was subject full time, special consideration is too much work. Too much work, so I was like, no, fuck it, I'll do this one next units. So I still get the months of being at uni kind of thing happening and go from there. Maybe we have to do this straight away.
Yeah, I know. Well, like, that's, and then that was like my third as well. So it's almost like well, I only made like 2 1 to 3, lots of
I know it's going to be pretty heavy.
That's why I came in because I'm
Where was he? Where'd you meet him? Oh yeah, I'm right there, yeah. That's what we're doing this
Because last time.
I do this one.
Oh yeah, no, this is good. Yeah, that's actually yeah, it's just
So it just depends on what
If you bought here, sold that, you made yourself
We're probably going to get started again. All right. So just before we get started, there's one thing I do want to talk about. Did anyone get the chance to? Did anyone have a look at the back test that I put up the other day? So the reason I put this one up is because a few people had been asking me about how to actually do a proper back test. This one is the way I do it is probably a lot more in depth than any of you will need to. If you want, you can just do it by memory, but this is what I do. So what I do is I draw what strategy I'm doing. That's just the first letter of everything that I'm using, and then kind of what the goal is. So to improve current model, include more aggressive take profit and entry points, and then you jump straight into testing. Try and make comments about what could potentially work and what couldn't. So at this point here, I went FS, which is Fibonacci spiral, acted as a dominating support and resistance, only take after proven break. So that is telling me I'm setting a law for my strategy. You need to set rules for your strategy that you won't break. And as I'm just doing a test, I got short-term effective adverse effects on that, and then I tried to go, okay, apply an X and Y variable, and then it just didn't work. So I said, just don't do that. And then at the end of that, you might want to summarize what you did. So for me, it came out at a 94% accuracy over 100 trades. So that was quite good. And then I just did a summarization of what the profit reflected. So my average loss was 15.5. My average PIP was about 55. So that was pretty good. Profit factor, 3.5, and the amount of profit that I would have made was $5,000 from a start of 1,000. And then I just ramped it up to be a bit more appropriate for my situation that I have. So that's how you do a proper backtest. Just backtest, identify how much money you'd actually be making if you would use that strategy, and figure it out. So okay, so I guess name an asset. Not all at once. You're in New Zealand. Why would you want to do that? We'll go Oanda. Why not? All right, so now that we've established the tools as well, what I want you guys to do is not only we're going to get you to break up in your groups, but I'm going to give you a little bit more time to kind of discuss. And I actually want you to think about what tools you'd use, why you'd use them, and I'm going to come around and ask you what you would use and why you'd use them. And I want you to try and plot them on the graph as well. If you get it wrong straight away, I'll tell you that you're a fucking idiot. No, I won't. I'll say that you're wrong, and then I'll help you get it right. But this is what we're going to be using. So everyone have a look at this. If you didn't notice there, you've almost got that candlestick. That candlestick should say something to you immediately. So go for that. I'm going to try and think of 2 positions that to take on this. One of them might be right. They might be wrong. I don't know. But yeah, we'll go in lines. So first line, second line, and third line. That'll be your groups. Is there a fourth line or is it just 3 lines? I can't really tell. Sorry. 3? Okay, just break off into the group. You got 5 minutes. Quickly do it. Have a chat. Think about what you want to chuck on it and why. Go. Yeah, discussion. What's happening? Right. All right, so there's not much talking going on, so I assume you had a discussion. We'll go with you guys at the front. What will your position be? What tools would you like to see and why?
Can we see the gun regression tool?
Yep, from where? Regress from where to where?
Way back. From views.
Yeah?
Maybe up there.
That is a lot of data, but sure.
And the gap fan.
Absolutely. Okay. I don't think that was the most helpful one, but I think then what you may have included too much data and you've missed too many A/B points. Because if you're looking here, that's great. It broke there. What's next? Okay. Do you have another one that you would like to see, or anything else? Super trend. So yep, from where to where?
Yep, focus it down to that next. Yeah.
Here. Brilliant, very nice.
In the long term, it's not like, yeah, definitely you wouldn't scalp with it.
Okay.
But you wouldn't want to trade on that.
No, I just want to throw it.
Okay, cool. All right, group 2. Do you guys have a position that you want to take?
I was taking sell.
Sell? Okay, short. You guys?
We're gonna go sell.
Sell. And do you have anything that you want to put up?
Yeah, can we put a pitchfork on?
Where? From where to where?
We'll go from the most recent high.
And okay, so what? Up here, or are you talking here, or are you talking here?
No, the first one.
And which pitchfork do you want to use?
I use pitchfork. So is it the shift, the non-modified, or the modified? I forgot.
Which one do you want? There's 2. There's the modified and there's the modified shift and the
Which one's the?
Can we say the shift first and then the modifier?
Yeah.
for example?
Sure. What are your points?
Yeah. That go from there,
Yep.
and then there. Yeah.
Here.
It's just 2. Oh no.
That's a buy.
Okay. So even if you were trying to use the other one at those angles,
Double.
yeah, very good.
No pitchfork, no deal.
Maybe.
Ah.
What if they did it to the lower?
Yeah, keep that up.
So where do you want it? From here?
Could we chuck a fan as rotor build up, please?
A fan where? And what kind of fan?
What was it called again?
Gun?
Gun.
Yep, so the gun fan, where do you want it?
In the middle of the red line is zero between the pitchfork.
Here?
Top end, yep. Now to go to the very top again.
Here?
Very top left side up.
Oh, right.
Down.
And where do you want me to join it to?
All the way down the middle. Black line crossing the black. Yep.
There? Yeah, Harami did. Alright, group at the back. What do you think? Do you want to clear this stuff or do you reckon keep it?
Keep it off for now. Can you zoom out?
Yep.
Zoom out to the previous big bloke.
If you want, you can retrace that. Sure. Where do you want the retracement to end?
Yep, from the low to the
It's very good. Very, very smart. What do you reckon about that?
It's got to do something more.
Yeah? So, okay. So now what I'm going to do is I'm going to show two analyses. One will be a buy, one will be sell. You have your own decisions. I'm going to try and push both of mine. And then I want you to make a decision. Do you have something else to say?
Sorry, quick question. With the Garm fan, I reckon they're like sick. But would that be valid because we did? You know how you drew the
You didn't regress it?
Yeah.
That's fine.
Yeah.
You don't need to regress it. It's just that it kind of overcomes the whole idea about having to use that 45. So right now you're at 54 or 55. So it's not too big of an issue, but like it's up to you. So you have your own opinions. My first one is obviously it's going to be a sell. What I think it's going to be sell, it's been quite aggressive on the downward trend. As we saw before, it looked like it, even though it was not the smartest idea in the world. But even though, if you look at this position here, and you draw a fan from there to there, it's quite clearly broken it. So I think that it will continue to fall. I don't see a reason for it to continue to, or change behavior in any way. If you draw a pitchfork, it's been tracing this very, very well. I think that it will continue to drop and continue to follow this this pitchfork, sorry. So for my first one, I'm going into here. I'm going to set it just a little bit above the previous high, which is a bit high, 250 to 260 pips. That's fucking massive. And then I'll set take profit. Sure, why not there? Okay. Now my reason for buying is actually really, really simple. The person that brought up the Fibonacci retracement, who was that? That was very smart. Why would you want to draw up Fibonacci retracement? Because it's been quite a lot of data, and it's actually at quite a big low. So if we look at this, what do we notice immediately? It's bang on the 0.5. It's 50% retraced. For me, that there's a very good idea that a reversal could be happening. Also, if we look at the past situations, you've got support here and support over here as well. So for me, that there could indicate a potential buy. There's also one other thing that I do want to try, and I want to try a less aggressive than what Harami had put up. Gun box, not a gun box, a fan. However, I think that there will be very useless. So yeah, for those two situations of the retracement and the of the support level, I think that it will be a buy. However, there's one more thing that I do want to chuck on, and that'll be the VP. We don't need fixed range, visible range, and session volume. So just looking at all this data here, it's come towards the end of it, so no more volume has been traded. Intuitively, to me, that means that it's quite low. Looking at it from an investor side, if I was an investor, I'd want to buy at a low, sell at a high. So I'd want to invest there. If we look at the session rating as well, though, it hasn't broken it for quite a while. It's a new day, even though it did break it on the previous day. So that intuitively makes me think that it's going to be old data and it will retrace. Also, just looking at the candle, you've had quite a lot of buying pressure there. It looks like selling momentum has ended. So based on those two things, I think that in this particular situation, we're going to get a buy, and I'm going to set it to the previous high, which will just be there, and I'm going to set that just there. So those are the two positions that I think it might potentially take. Now it's up to you. Short on the left side, buy on the right side. No, that's buy. That's short. Yeah, so if you think the price is going to continue to drop, be on my left or your guys' right. If you think that it's going to go up, that side.
Can we wait a few candlesticks?
If you want to. So we've had someone ask for a few candlesticks. I'll play 2.
One more. Or a bigger candlestick.
Those are your 2 candlesticks.
Wait, what's, I'm confused now. What's
No, this is sell. That's buy.
That's buy. That's sell.
You can stay in the middle and don't put a trade.
If you stay in the middle, I will come for you and hound you. So I'm assuming that everyone on this side has chosen sell. Is that correct? All right, Soren, why do you think it's going to be a sell?
Because the trend is your friend.
The trend is your friend.
It's a downward trend. We've got huge bearish bars.
Well, that didn't fucking help. I was going to try and be like, ooh, the velocity of it has changed, but no, that didn't work. Hermie, what do you think it's by?
Mainly because of the retracement.
Fibonacci retracement? Okay, well let's have a little bit of a look. So I said buy there, and we'll press play. And you've just taken profit, and anyone that said a buy has just lost 185 pips. That's a lot. That is a lot. So, one thing that Soren said should have stuck out to everyone that said buy. The trend is your friend. The trend is your friend. In this situation here, it's a 50% retracement. That means it still has 50% or halfway of it to go. That's not enough. If you were going to base it just off the retracement, you'd want to go for, say, a 68% or potentially higher. Sorry?
Isn't it at 78%?
I thought it was at, oh, it is at 78%. That was a bit strange. My bad. So that changes that point. But it goes back to the idea of the trend being your friend. Going into the trend, especially with this much momentum, you know, since it's been going on a downward trend for, at the point, you know, 27 days. The chance of you picking that reversal, very unlikely. The safe bet there would have been to go into a short. Another reason for it going into a short, it just is the trend in this situation. It is literally just down to the trend being your friend. The market continuing to go downwards. You can put on as much technical analysis as you wanted to. Your idea that, another idea that it should have been a short was when you placed on the 2 Garn fans. It broke on the 1 to 8. Even though I said that it would be relatively useless in those situations, the fact that we couldn't even get as far using 2 Garn fans to get to reflect current data should have shown you an indication that, okay, we've tried twice, it's not going to get there, I don't think it's going to go anywhere. And the final thing actually came from the individual that pointed out the non-regressed, what was it? The non-regressed, I think it looked something like that. The non-regressed Garn fan. Now, what did I say when I drew out the Garn fan? The 1 to 1, what does that reflect? The strongest bit. It's where the trend will follow the most. And look at this. Doesn't it just follow that trend really well? It's had one deviation here, but then it met that 2 to 1 and continued back on it. So intuitively for you, you've got the Garn fan following it. You've got the trend as your friend. For you, it should have been an intuitive sell opportunity in that situation. Does everyone understand why it went wrong there? Brilliant. All right, we'll do another one. Can we have another asset?
That was the Australian CAD report, mate.
Australian CAD? Okay, everyone have a quick think about what the position might be in your groups, quickly discuss as to what you might want to see in it, and then I will try and put 2 positions forward for you to have a look at. Before you do start though, consider what is actually going on in the market right now.
Oh, this is currently?
No. This is back data. This is on the 30th of June. So have a look at actually what's going on in the market right now. What's going on in this situation here? Pay close attention to it. Does anyone know what's actually going on? And this is the most recent candlestick if anyone wants to have a look at it. But can anyone tell me what's just going on in this kind of span of the market? The last 55 days, what's been going on?
No, this is 2018.
Yeah, this is
That's all
two.
It's
But it's replay data. It's replay data. It's 2018.
Yeah.
And I was asking what's going on in the market right now. If it was,
Oh, you said right now. I thought you
yeah,
said
right now, as in if it was the 24th of July, what would be going on right now? Can anyone tell me what would be going on right now? What does all this kind of signify? Thank you. So just have a quick discussion between yourselves. Top of the class. Yes. And then I'll give you 5 minutes to have a chat, and then I'll point you to positions that one might be wrong, might be right, but just have a quick chat between yourselves. Thank you.
It's the only thing I'm doing.
Is it the square one?
What do you want to put up?
No, not that. I just forgot the name.
Oh,
The one that's not the fan, the box.
The box with all the
Yeah.
oh, with all the fucked up lines in the red, that's a gun box. Does anyone want to see anything put on the graph?
I'd like to see.
Sorry? Does anyone want to see anything put on? Sure. There you go. Session volume. Does anyone want to see anything else?
Fixed range.
Thank you. I was waiting for that, Harami. Where do you want to start from though?
From the start of the consolidation.
So back here?
Yeah. All the way to there.
Very good. Does anyone have anything else they want to see? No? Okay. Alright, so okay. Group 1, do you have anything that you want to see? Are you all good? No? Group 2? No? Group 3? Beautiful. Right, no worries. So for me, the first thing that I actually would have done is I would have chucked on the fixed volume. Reason for that is you're in sideways, you want to try and identify that break period. So very good on Harami for pointing that one out. The next one I'm going to do is I'm actually going to avoid putting on the tools straight away, just because I just want to try and identify what might actually be going on in the market without jumping to tools straight away. So I've drawn that, a little bit of a descending triangle, two extremes, but that's fine. And now I'm going to try and draw a particular a pitchfork, but you just got to find the right pitchfork for it. So this is probably one of the most annoying things about the pitchfork. It's trying to find which one suits it best, and I think that one there does. Fantastic. That's actually really nice. Okay, and then the final thing that I want to do is I want to put on a regressed Garn fan, and I'm just going to do it from there to there. Oh, that's very spicy. That's very spicy. Okay, so my position here is going to be a buy. The reason I think it's going to be a buy is because we've got this acting as support right here. We've got this acting as resistance. So for me, it's going to come towards a building of pressure. It's going to have an explosion in the upward sense. Also, along the bottom here, we've had quite a few acts of support. 1, 2, 3, 4, 5, 6, 7, 8, no, a few, you get the point. So for me, I think that as it's going to approach that point where the asset's going to explode in a particular direction, we're going to get that massive amount of buy pressure. So for me, I would enter into a buy, so a long. Starting from there, I'll put my take profit right there, so 60 pips, and I'm going to put my stop loss right there at 30 pips. Now, the reason for a short is actually hugely based on the Garn fan. I'll just delete that. Now, what's so important about this Garn fan is that it's actually broken that 8-to-1. Now, because it's broken that 8-to-1, I think that the asset will just continue to fall in free fall, and I can't see a reason for it being a buy. I do just want to chuck on one thing as well, which will be a moving average. So, a moving average of 200 days, it's quite significantly below, and a moving average of 100 days, again, is quite significantly below. Can anyone tell me why I might have chucked on a moving average in this situation?
To determine if it's in trend or not.
Also, because it's in a bit of sideways movement, I want to try and identify where these breakout periods might be and try and see if it's in that avoid area. So, for me, intuitively, I'm going to enter into a short position right there. And I'll put my take profit there, and I'll put my stop loss down here. Also, if you just look at it, it's looking like it's beginning on a downward trend, just going like that. So for me, that there could be a reason for a short. Now, sell, buy. Get going. Okay, so this is another. What are you guys? Is this buy? So another reason that I think it's going to be a sell, I just drew that up and it just happened to work, is because the 8-to-1 is here. I think that it hasn't had the opportunity to effectively break it, and it's retested here, broken, retested, broken. It's just every single time it's gone down. So I think in this situation there'll be no difference, and I think that you're going to get quite a significant downward sell. Does anyone want to change their mind about that, or we all good? Okay, a euro sell. Why?
Because of the descending triangle, and also because of the fact that it was getting closer and closer to your support line.
Wouldn't that be a reason for a buy? Why wouldn't it be? If it was getting closer and closer towards the support line, wouldn't it
But
be?
it was also forming the descending triangle, so it would indicate of
Okay, fair enough, fair enough. I don't actually know all of you guys' names. I was just thinking about it. I'm going to say Army Guy because I've forgotten your name. What position? Why you want to buy?
Depending on the trend right now, is considered horizontal movements. If I won't break for the 8-to-1 line, or if I break just after the 3-to-1 line, then that's where. So I'd buy now, and I'd say about the 3-to-1 line.
Okay, cool. Well, let's.
Probably won't go past 2-to-1.
Is everyone happy with this buy for you guys? Is 38 pips enough, and is 71 pips enough of a take profit? Or is it too much? Okay, let's play and see what happens. Guys aren't very good at picking this, are you? Okay, so I guess this goes back to our point about 95% of traders being wrong. Yeah, so the reason for it being a sell in this situation actually only became apparent for me, because I actually did think that it was a buy that whole time, until I drew that second Garn line on. As soon as I drew that on, I realized it was going to be a sell. The reason for is because look at it historically. Every time, what's this? I don't think that's going to be more than... Okay, that's actually a bad example. But see the situation here. Tested, gone down. Tested, gone down. Tested, gone down. We've had little drops of it being above, but nothing significant, nothing substantial, nothing to say, okay, yes, this is 100% an opportunity. Now, another thing that I would have put on is actually to do with the fixed range that Hiromi had set up. It was there. I would have potentially just gone from there, because that's sideways. This looks like it's a little bit trending. So if we go here, right here, we've got our point of control. We failed to break above it. Intuitively, sell. Does everyone understand that?
I understand the fixed range I understand the feature.
Sure. Okay. So no worries. We'll go back and we'll clear all this up, and we will go back to where we were, which I can't remember what it was. It was there-ish. Okay, so we were here. It was very good that the fixed range was put on. However, my issue was that it was put from here to I think about here. That's where it was put. Now the big issue with that is does this look like it's sideways? You've got, for me, that there's an uptrend. That there's at least 200 pips or something. Maybe not, but it's 200 pips. It's 200 pips sideways movement. Even though it did drop all the way back down and went back up, that there would be a head and shoulders pattern, wouldn't it? Or the start of a head and shoulders, almost a head and shoulders pattern. For me, that isn't sideways movement. Sideways movement for me in this situation would have started right there. The reason for that is because that's where the asset is moving sideways very rapidly. Here, it's taking its time. It's not really going anywhere very quickly. That's 35 days. You know, for me, this here is 14 days, and it's just gone sideways. It hasn't gone anywhere. There's no progress to be made. Here, it's gone all the way up by 200 pips. It's gone all the way down by 200 pips, and then it's gone all the way back up by 200 pips. Although, yes, that is, I guess, technically sideways movement because it's not really going anywhere. You're getting these huge jumps of 200 pips. Compared to this data here, they're too different for me to consider. And seeing how it's, I think we're a bit more forward than that. That looks a bit more correct. Seeing how we've actually failed to break that, I would enter into a short. We failed to break the POC, and we had that gun fan that was showing that strong 8-to-1. Does everyone understand that?
Yeah, but like, what does that actually mean? That's what
what did you mean? Oh, okay.
Yeah.
So all this is doing is it's showing the volume profile for this area. Okay. So it's showing the volume profile for all the sideways movement, and it's showing you where the highest buying or where the highest activity is happening. So here, this is where the highest activity is happening within this range. So in this particular area, that's where it's either a high amount of sellers or high amount of buyers have entered the market.
So what's the yellow illuminated there?
So this area, this section here is called HVT, high volume trading, and this is LVT, low volume trading. You don't want to be in HVT because that means that's where traders are really active. Low volume trading is where they're not very active. So you can see that if you break here, it just plummeted down, and that's exactly what happened there. Okay, so we'll do another one. Does anyone have another asset? No.
What, USD, CAD?
USD CAD. I'll ask you this as well. What time frame do you want to do it on? Does anyone have a time frame that they want to do it on? 5 minute?
Daily.
The ticker? The 1 hour? The 30 minute?
We do what, 30 minutes.
30 minutes, no worries. Okay, let's go back in time. Okay, so this is where we are. Jesus Christ. This is where we are. Quickly have a chat between yourselves, and then I'll put up 2 positions. You know what, actually, I'm going to change it. I'll do mine first, and then you guys have a discussion between yourselves, and then come to a conclusion as to what, if you're going to make, if you're going to do something. Yeah, I think that works. That works nicely. So, intuitively, just looking at this, the first thing I see is it looks quite underpriced. You know, you've had a full retracement of almost 485 pips. Usually, whenever a big drop like that happens, you get quite a large gain happening as well. So, the first thing that I want to do is I want to see by what degree has it retraced. So, I'm just going to go from there, or if it's retraced at all. I'm going to go from there down to here, and it looks like it hasn't even gotten to the 23% mark yet, which is fine at the moment. The next thing that I want to try and do is, can anyone tell me why I wouldn't try and put a pitchfork on this? Why it'd be a waste of time to put a pitchfork on? Without even drawing it, why do you think you know that it's a waste of time?
It will cover all of it.
It will. You could get one that will cover all of it. No.
You already know it's a downtrend?
Nope. Why do you think it'd be a waste of time?
It's already broken off.
Pitchforks are great when the market is in that trend, but as soon as they break that trend, they're useless. Where would I put the AB pattern here? That you really couldn't draw one. If you were, you'd have to do it something like that, and it's just too small, it's too constricting. It wouldn't be useful to you. So if I can't draw a pitchfork, the next thing that I want to potentially look at drawing is a Garn fan to see if I can draw that, a regressed one. Drawing one there won't do, so I'm just going to go maybe there to there. And the last touch is here. Now, for me, that's all I need to do on this position. I'm going to enter into a short. It'll be a short term one. So my intuition here would be to put that there, set it at around 50 pips, and go to the previous low. So I've got to take profit of about 76 pips and a stop loss of 54, and that there would be the position that I would take here. I'm not actually going to do a buy position because I want to see if any of you will disagree with me. So have a quick chat between yourselves. This is my analysis. This is the one that I think. What do you guys think?
Can you zoom in just a little bit?
Zoom in, sure. What do you guys think? Does anyone think it's going to be a buy? Does anyone think it's going to be a buy? Huh? Okay, what's your idea behind the buy?
Double bottom, and if it breaks that again, but then it's just in the middle, so it hasn't reached the top, or it's already starting to pull back, so I don't know.
So you think it could potentially go back down to here and then shoot up?
Yeah.
Okay, I'll put that down. A long position.
Does it fall in that 45?
Okay, something like that? You think? Okay, does anyone else have a different idea? Harami, what do you think?
I think so, because there's also heavy resistance
Mm-hmm.
at that area.
So where would you say? What, here?
So one of those is the volume profiles. I think it's pretty.
Which one?
I don't know.
Which one would you use? Would you use fixed?
Yeah,
Why would you use fixed? It's not sideways.
isn't it?
Is it?
Yeah, kind of from the end of.
Kind of like,
Kind of at the end of the big regression line.
where? Where would you put it? Tell me.
Left, 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 left. Keep going. Keep going. Yeah, from there.
To here?
Yeah.
Okay. What do you think about that? What's that saying?
A lot of people are trading in that area.
And what position are they taking?
I don't know. Short.
Short. Does anyone know why it's so short? There's more bars on this side than there is that side, so more people are selling.
Wait, so which side?
There's more bars here than there is up there, so more people are selling. Does anyone else have anything they want to see? Okay, let's just press play and see what happens. Done. So, you took that buy. Okay, yes, I did like your idea behind the idea of the Garn fan. And yeah, you know what, I'm not even going to consider this a loss on your behalf because you probably wouldn't have entered into a buy if you had seen the data that was up to here. So I wouldn't even consider that a loss on your behalf just because I know that you intuitively would not have been as stupid to enter into a buy against that massive engulfing trend. So yeah, 100%, it was a sell opportunity. That Fixed one. I'm glad that you actually said that and didn't listen to me when I said it was not sideways movement, because 100% it is. The start and end point are roughly the same. Intuitively, you're gonna have sideways movement. Yeah, you guys got a nearly 80 pip drop. Fantastic, that's great. If you look at it, we can get rid of this one. If you just look at this, you've got that very, very nice testing of that one there. And if you look at this, your confirmation of a buy came right here. Now, I do have one question for you. Let's say that you'd entered into a sell at this point here, and then it came back up and retested this and broke this. Would you exit the trade if it broke that line? Say as it's done here. So if you were in a buy and you entered here and it came down, if it came down here and then for some reason, let's say you were asleep, yeah, you might be asleep at this time. If you were asleep and then you woke up the next day and it was here, this was the green one here that you'd seen, would you exit?
No.
No? If you were in a sell position, so let's say you entered into a sell here, where my mouse is, it fell all the way here, for whatever reason, you went to bed, you had a shower, you were at dinner, and then it retraced all the way back up, and then the next time you came to check your graph, you only had up to this green line. This red one didn't exist yet. Would you exit the trade? No. Would you honestly exit the trade?
Yes. Oh, honestly, probably. Yes.
Probably?
I'll shit myself.
Yeah.
You'd shit yourself?
Yeah,
Why would you shit yourself? You're breaking even. Like this is where you've entered into the short. At this point, you're down like 80 cents. Maybe at this point. You've gone down, you've entered into the short. If you were there at your computer, you would have exited the trade here, but you haven't, and it's back up here, and you have the only piece of data that you have that's available is this. This is what your graph looks like right now. Would you exit the trade?
I would.
You would?
I'll probably think about some economic event happening or something.
Yeah?
And I would just exit there.
You'd exit the trade? So you'd take the loss?
Yeah.
Yeah? Even though it is 80 cents, it's nothing, like who cares? But would you exit the trade?
Wait for the next candle, see if it breaks below or above that gun.
That is exactly what you should do. You shouldn't be too concerned unless it's broken this one here. If the next candlestick was to come out and do something like this, unfortunately, yeah, you've lost. You've lost. It doesn't matter. It happens. You're going to have losses in trading. But the opportunity to make money is still there. So there's no reason for you to panic. It just went like this. And the next candlestick confirms that. And then it just keeps going back down.
Why did that go up so high?
Why did the green one go up so high?
Yeah.
I don't know. I don't know what was going on at this date. It could, for me, it looks like there was some kind of news that came out because that's quite a sharp turn.
So what if you know the news? Would you sell it?
Sorry?
Would you sell it if you know that there's news that make the green go so high?
I would still wait. I'd still wait to see what the technical says.
Okay.
Because you know what? There's actually a situation of this. Do you remember when Trump closed cabinet? Closed his government? So Mohammed and I were talking because it was the first time that the non-farming payroll was going to be released since Trump had closed the government. So intuitively, it's going to be a buy on US anything, because the result's going to come out. It's going to be higher than forecasted. The forecasted was it was supposed to be 40, but the previous was 160 before Trump had closed the cabinet. So intuitively, you'd go, okay, well, the cabinet's reopened, everyone's getting money, they're getting paid. Intuitively, the non-farming payroll should be quite high. So that means it's going to enter into a buy. What actually happened was, a little bit, about 20 minutes before the non-farming payroll came out, the forecast changed. It changed from 40 to about 150. So that means the only difference was about 10. So even though it said that there was bigger, and it did kind of reflect the data, about an hour after the farming payroll had come out, it went back to normal and it dropped. And that there is something that could happen here. So USD CAD, we've got a massive drop and then it just retraces. I'd still want to wait to see what the technical side of it says, because the fundamental news really only affects an hour before and an hour after. So let's say it's here, an hour before, an hour after. and it's come back up, I'd say it's probably a good idea that's going to just retrace back down. And one thing that you'll notice from if you trade, if you do start to trade, big changes like this don't usually last for long. There's actually a really good example on the USD, AU to USD. I wonder if I can find it though. It didn't happen a little bit a while ago. Yeah, even just look at here. Massive, sharp, hugely ridiculous candlesticks usually end up just going back down to what it was after a small period of time. So even though this did happen, you know, a day and a bit, and it's already back down to where it was. It's abnormal. You know, the market can't sustain that level of growth. Jeremy.
What's your opinion on like taking positions opposite to the spike?
What do you mean?
Like after the green spike.
After the green spike, enter into a short straight away?
Oh, like after waiting for a bit and then seeing like an opportunity.
Like, yeah, I get what you're saying. It's risky. It's risky though to enter it to go against the trend. What I'd want to see is I'd want to wait a little bit more for sideways movement, and then after that, I'd probably enter into a short. Right. Even if you just look at this situation here, that there should kind of be enough. You know, you'd wait for that to be tested, and then enter into a short straight away. Okay, does everyone understand that? Okay, should we do one more before we call it a day? Okay, can we have another asset then? Do you actually want to do Bitcoin?
I don't know. Let's do Bitcoin. I don't know how to read it, bro.
What do you mean you don't know how to read it?
Not Bitcoin.
I mean, it's pretty much the same as Forex.
Bitcoin too many like warehouses just dump it.
What is it? Bitcoin? I don't even know what the thing is for it. Bitcoin USD, is it that one?
Yeah.
Fuck, thank God Muhammad's not here. Fucking kill him. He'd be like, what the fuck are you doing, you stupid inbred?
The Muhammad voice nailed down as well.
Yeah, honestly. Alright, so this is where it is. I've never done an analysis on Bitcoin. I've never really traded Bitcoin. I did it when it was big, you know, bought early and left at 10k because I didn't think it'd go much higher than that. But yeah, apart from that, I've never really done Bitcoin. I don't know why that's there, but I must have done it. Yeah, that's fucked. Yeah. All right. Anyway, so this is where the asset is. Have a crack. What do you guys want to see? Fixed range. Very good. For anyone that's interested, though, the volume profiling were actually made, or are the biggest instruments used for trading Bitcoin.
Really?
Yeah. Yeah. Because what is Bitcoin? What is Bitcoin intuitively? Like, what is it? It's not a tangible asset. It's based off supply and demand. Yeah. So if people can work out where people are trading it, that's how people trade Bitcoin. Like if you see a Bitcoin graph that doesn't have a volume profile on it, it's really just rubbish.
Right.
Okay, so that's what you got. I mean, I've already formed an opinion on what I think it's going to be. Does anyone have an idea of what it could be just looking at that? Short? Can you tell me why it might be a short? Yeah, I also see this big candlestick here. I think that's been enough time. I think it's just going to drop back down. Okay, does anyone else have a different idea? No? Does anyone want to see anything else on it? Anything at all? You know, you won't have the class on your own when you're at home doing your analysis. So if you're not confident saying what you want on it here, how are you going to be confident at home?
Wait, are you buying or selling?
I'm selling.
Jonathan?
Sorry?
The regression?
Yep, where?
The high point inside the from where it touches the low point, the point of control.
What, here?
Before.
Here?
Around there, yeah.
It's very tight. But okay. Okay. Alright.
What was the box called again? What the level lines on it?
Let's not do that one. gun box, but we won't bring it up. It's a bit too much. And I've never done it on Bitcoin, so I'm not too sure if it even works. Does anyone want to see anything else? An indicator, RSI, for whatever reason, if you want to put that up. Or do you just want to press play? Okay. So we were trading around here. Jesus, what the fuck? Maybe I should start trading Bitcoin. Yeah, okay, so we just made 5% on our portfolio, which is massive in not a very long time. In a day. That's pretty good.
Pretty good. Isn't the spread crazy?
Huh?
The spread's crazy, right?
The spread's pretty fucked on it though, but if you held it all the way down there, fucking 10%.
My
What?
Jack was 13% margin as well for cryptos.
Really?
13%, I'm pretty sure.
Oh, that's massive.
100%.
I
So,
went into one mini lot position, like just out of curiosity, and then already I was down $16 because of the spread.
oh mate, if you want to talk about spread, the China A50 has $50 of spread per contract.
Mini or
Probably standard. I think you can for indices you can only do the standard.
Oh,
So yeah, if you enter into 10 contracts, guess what? You're $500 down already. Yeah. All right. So that was a fun little joke. How about we do one other one proper one. No, it wasn't. That was a joke one. Come on. Eurocad. Okay, Eurocad. Are you in this right now?
No,
What was your position?
it was on 20 minute. It
20
was a sell.
From where?
That's last
So it was this morning. It was chill.
All right. So it'd be
I've got time for-
if you did it up there, fucking amazing. 9 o'clock.
10:30.
That's alright.
Right around there. So you've made money. That's all right.
Yeah, I know. I'm up $70 up.
70.
Yeah.
What was your position size?
5 on a mini.
It's pretty good. It's very good. Do we want to do an analysis to see if Siren's going to be right?
Yeah, do it.
All right. Okay. Okay. So we're on the 20-minute. So intuitively, it's going to be a lot more activity on the market. It's going to be a lot more pretty much just all over the shop. So what do we think is going to happen? We all know it's going to be a sell, but let's try and identify how far the sell is going to go for. So the reason we can tell that this might be a sell, if we put a resistance line right there, we've got one touch, we've got two. Even if we look back in time, we've got a few there. Hasn't really broken that far. So let's try and identify where we could have a support line. So if we were trying to identify where we could do this, what indicator would we want to put up? Straight away. Bone profile. Thank you. Which one would we want to use? Session, fixed, or variable? Which one?
session and fixed.
Session, and we wouldn't really use fixed because it's not sideways. Sideways was down here, but it's broken above that. So we're going to use sideways and visible. Okay, so this is it. Siren, you might be in trouble soon.
Mate, blame Mohammed for that one.
Love it. All right, so just looking at this, man, I don't reckon you're going to have a problem until down there. Yeah, I don't think you're going to have a problem until right around there, man.
How many is that?
55, 53. So if you get into 5, you're looking at $250 maybe.
Nice. Pretty good.
Yeah, so that's a pretty good trade there. All right, well, I guess that'll end it for today. Thanks for coming and have a good day. Thank you.